Okay, guys, so in this session, I'm going to cover a new topic called foreign currency setting. What is the use of foreign currency setting? Now, uh, if you talk about current situation, nowadays situation, every companies are proceeding towards this, globalization and all, and almost all whoever the medium-sized companies are there, they will be having certain customers or vendors in foreign countries also. At least if not UK, US, then of course some neighboring countries are also there. So there they'll be having certain businesses and all. They'll be buying certain things from some foreign vendors, or maybe a chances that they're going to sell something. They'll be having foreign customers also. So in that case, what will happen here? So in that case, like the transactions are taking place in foreign currency. Say for example, Tata Motor. Tata Motor is having like they're having markets in US, they're having market in UK. So if Tata Motor is having market in US, what will happen? Tata Motor is going to sell their product in US market also. Say for example, they're having uh, dealers, distributors in US market. What will happen? They're going to send their vehicles to US. So first of all, they'll be having certain depot over there. Depot in the sense like they're going to store all their four-wheelers over there, and from their depot they're going to distribute throughout the countries and all. This depot will be owned by a local owner. So every month they have to make payment of rents and all. Those rents we have to make payment in let's suppose US currency. So if you are going to make payment of those rents in US currency, so say for example we are having only one rent GL. In that, like every month we are posting a rent of 10,000 rupees for corporate office. For corporate office, let's suppose, and then say for example we are having around 20,000 rupees rent we are posting for some other office which is there, which is located in Delhi or Mumbai or anywhere. Likewise, different rents are taking place, whereas the rent which is paid to US depot, the depot which is located in United States, US, that is payable, say for example, $500. Now, if you look at the balance, total balance, then here how are we going to balance this? In the sense, how will be that if you're going to calculate the total rent expenses, here it looks like 30,500, but generally it's not 30,500. If you convert this amount, this we have posted in INR, means our currency, and this is in US dollar. So what we'll have to do in order to get the correct figure, what we'll have to do, we'll have to convert this amount into local currency. In the sense, let's suppose 1 USD equals to 60 rupees, so it should be 30,000 INR. Okay, and that's how if you calculate the total, then it will be 60,000 rupees is our total rent expenses. Okay, so now we are using SAP. It's an ERP. Earlier, when people used to manage registers and all, in those days they used to calculate the value manually or with the help of calculator, and that's how they are going to post the entries and all. Here what is going to happen, we have to do certain setting, and based on that SAP is going to convert this amount automatically. We post, see, the thing is like whatever transaction is, let's suppose if you have paid or Tata Motor has paid rent in USD currency, we must have to enter that transaction in the same currency. As per the rules, accounting principles or rules, transactions, whenever transaction is going to take place, we have to post at that point of time itself. The transaction should be recorded at that point of time itself. And if it is going to take place in a different currency, we have to record in that same currency. But we are having certain functionality, we are having certain setting. If we do that setting, then what will happen? Even if we post transaction in foreign currency, also system is going to convert the amount automatically into local currency, so that for us it will be very much easy to analyze our books of account. If you see the rent account, you'll come to know, okay, 60,000 expenses has been there for this month, or total expenses is 60,000 rupees. Now, so what setting we are going to do, that I'll explain, and there will be a very much important topic in that, that is also I'm going to explain you guys. Okay, now one more thing I'll have to cover, one more thing I'll have to explain here, that is, see, if we convert, like let's suppose this 500 USD should be converted into Indian currency. So we'll be having two different rates. On which rate we are going to convert, that also need to be decided. Like let's suppose if you have if you have 1 USD, okay, and if you sell this USD, in the sense if you are going to sell this USD to US currency to bank, then bank will say that I will pay you 60 rupees, 60 INR I am going to pay for this. It means bank will buy this. Bank is, see here it's you, in the sense your organization, and here is bank. So now what is happening, if you are having, okay, so you are having 1 USD and you went to bank. Bank is telling that I will buy this currency, but the price will be 60 INR, in the sense I will pay you only 60 Indian currency for 1 USD. So bank is buying this currency at what price? 60 rupees per US currency. This is called bank buying rate. I'll repeat. This is called bank buying rate. The rate at which bank is going to buy currency from others. This is called bank buying rate. It's pretty simple, guys. Now, what will happen? So here, if you have to sell, then you are going to sell at 60 rupees. Or in the other way, on the in the on the other word, if bank has to buy the currency from you people, bank is going to buy at a different rate. But if bank has to sell the USD, in the sense if you are planning to buy the same, bank says that I will sell at 64 INR. That is the benefit of bank. Bank is buying at different rate and bank is selling the same currency at different rate, and whatever the difference of 4 rupees is there, that is the benefit of banks. So at this rate 60 rupees, at the rate of 60 rupees per US currency, bank is buying from people, and at the rate of 64 rupees bank is selling to other people. So this is called bank selling rate. Okay, now here the problem for us is, if we are going to maintain certain rate in SAP, or if we are going to convert this 500 USD into Indian currency, in our currency, local currency, then which rate are we going to consider? Are we going to consider bank buying rate or bank selling rate? Because these two rates are different rate. Now what will happen here? It will be decided by organization what rate they are going to maintain, whether they are going to buy, they are going to maintain buying rate or selling rate. It depends upon them. But I'll tell you guys, generally what they are going to do, generally they will maintain average rate. Average rate in the sense, what is average rate? So buying rate plus selling rate divided by 2. So they will maintain average rate. This rate they are going to maintain. That is called average rate. Average rate means bank buying rate and selling rate. They'll say that we are neither going to maintain buying rate nor selling rate. Simply will maintain average rate. Okay, because company will have customer and vendor both. So they are getting certain currency from foreign customers. At the same time, they have to pay certain vendor also in foreign currency. So whenever they are going to make payment to the vendors, they have to buy this foreign currency from banks. And whenever they are going to receive payment from customers, they are going to sell this foreign currency to the bankers. So now, so that's what they are going to maintain average rate. Neither we are not going to maintain buying rate, neither selling rate. We are going to maintain average rate. Okay. So how to maintain these rates, how system is going to calculate, how system is going to convert this US currency or foreign currency into local currency, matter of practical, that I'll show you guys. First of all, we'll have to do a few step configuration step is there that we have to perform, and once it is done, then I'll let you know how system is going to convert this amount from foreign currency to local currency. Okay, so now we'll do the configuration, required configuration first. So the configuration part is very easy. First of all, in first step, what we are going to do, we are going to define translation ratio for currencies translation. The transaction code is OBBS. Use transaction code OBBS. Transaction code OBBS. It's taking some time. Now click on yes. Here, what we are going to do, click on new entry. And here system is asking exchange rate type. Always maintain exchange rate type. For average rate, SAP has already given standard exchange rate type, that is M. So we'll maintain M here and from. So I'm going to maintain the rate of one currency, that is USD to Indian currency. a validity date we have to give. So what is the validity date? Let's suppose this is 31st. So give valid from 8/31st 2017. Okay, and ratio from 1 and to 1. 1 is to 1 will be there. Press enter. Sorry, 31st 08 2017. The date format was wrong. Now it is, I have given 1 is to 1. Why I have given 1 is to 1? I'll let you know. Generally 1 is to 1 itself will be there. Save it. What is this? Here we are saying that how are we going to maintain the value? How we are going to maintain the value? Maintaining the value in the sense whether it should be, whether it is, if it is 1 is to 2. Let's suppose if I have given 1 is to 2, it means then the how value will be, going to be, isn't it? So here 1 is to 2 means the thing is like there is no much logic I feel here. How we are going to, 1 is to 2 in the sense like 1 USD equals to 120 INR, something like that will be there, or what kind of logic is there, that I could not understand. But generally what we are going to maintain, we are going to maintain 1 is to 1 itself. I'll just show you in next setting where is the impact of this. Now, so here in first step, what we are going to do, in first step we are going to maintain translation ratio for currency translation. The transaction code is OBBS. In that, what I have done, I have clicked on new entry. I have given exchange rate type M, and from currency USD to currency INR, valid from a date I have given, the current date, ratio 1 is to 1. And then the second setting we have to do, enter exchange rate, in the sense exchange rate table we have to maintain. The transaction code is OB08. Transaction code is OB08 slash N OB08. Press enter and click on new entry. So what is your exchange rate? M, valid from, give date, and then here from USD, and let's suppose we are going to give 60 rupees here, and INR. Okay, from USD to INR, press enter. If you press enter, see here ratio is 1 is to 1 itself. Now it means what it says. Okay, one more thing guys, I have to explain a very important topic here. We are having two things, indirect quotation and direct quotation. This is the most important topic guys. If somebody is going to ask any question from foreign currency setting, then what they are going to ask, they are going to ask the difference between indirect quotation and direct quotation. So these you need to understand, because configuration part, if you see at configuration point of view, only two steps are there, which is very 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 easy. And in that, let me save this. Now maintaining this foreign currency table, that is a regular activity. On regular basis, what will happen, people will keep on maintaining, because today one US currency value is 60 rupees. Maybe tomorrow on 2nd of August there is a change in the price. So what is happening again on 2nd of August, we are going to maintain a different rate. We'll maintain the same exchange rate here. We'll give date, not 2nd of August, 2nd of September I am saying. And here we'll give USD, and maybe on 2nd August the rate got changed. It becomes 62. Okay, it becomes 62. So now what will happen if we post any transaction on 2nd August after maintaining this rate? Then what will happen? System is going to search the latest rate which we have updated. System is not going to consider this 60 rupees. System is going to consider the latest rate. Why? Because we have given the valid from date also. So system will check the latest date, and in front of that whatever rate we have specified here in foreign currency table, system is going to consider this rate, and based on this rate system is going to convert the amount. If we posted any transaction in foreign currency, system is going to convert that transaction into local currency based on the recent rate which we have maintained in this foreign currency table. Okay, so what I said, the first step is only one time setting, but second step is like this activity is a regular activity. Every after 2 days, every after 3 days, every week, after 1 week, what will happen? People will maintain this foreign currency table because the rates are fluctuate. If you talk about foreign currency, if today 1 USD equals to 60 rupees, maybe tomorrow it could be 62. Day after tomorrow it could be 61. So it depends upon the organization. If it is a very big organization and the huge transactions are there in foreign currency, then on regular basis they are going to maintain these rates. Or if it is a small organization and less number of transactions are there, then maybe weekly basis or every after 3 days they are going to maintain this table. So I'm not going to maintain anything here. I just wanted to make you guys understand. That's what I have mentioned this. So we have already maintained one rate. Now we have to post a transaction and we'll see how the impact is happening. Oh my God, it's let me cancel this. Okay. So now I'm going to explain the difference between direct quotation and indirect direct quotation. What is this? So this is the major setting, guys, which you need to understand. So here I'll come here. What is called direct quotation? Direct quotation means, let's suppose the price 1 US currency equals to 50 Indian currency. So this is called direct quotation. It means how we are going to maintain the rate. One, as per direct quotation, 1 unit of foreign currency shows the total value of local currency. In the sense, 1 unit of foreign currency, 1 unit of foreign currency shows the total value of local currency. This method is called direct quotation. Indirect quotation. What is called indirect quotation? We can maintain a rate in this way, or else even we can maintain in rate in this way also. Like 1 INR equals to how many USD? 0.02. So in this way, if we are going to maintain the rate, that is called indirect quotation. Here what is happening? Here we are showing we are showing like 1 unit of local currency shows the total value of foreign currency. Here I am saying, see, in two way we can maintain this. Let's suppose here it is 50 rupees itself, 50 USD. Okay, or else If you want to, this is called direct quotation. If you want to maintain direct quotation, if you want to use direct quotation method to maintain our foreign exchange table, then here we have to give 1 USD equals to 50 Indian currency. Or else indirect quotation means here you can maintain 0.02 USD equals to how many. This could be also an entry is already exists with the same key. Why it is showing error? Because already we have maintained, we'll maintain a different rate here, like let's suppose 02. We'll maintain a rate here 0.02 equals to, okay. So now here one rate, one method is there, direct quotation, by which we can maintain the rate 1 USD equals to 50 INR, or else 1 Indian currency equals to how many USD? 0.02. So even in this way also we can maintain the rate, and even if you maintain this rate also, system is going to do the same calculation. System is going to do the same calculation. 500 USD will be converted into these many INR. How? I'll let you know. I'll let you know, guys. Say for example, see, we are having, I'll give you a very simplest example. 1 USD equals to, say for example, 2 INR. So here this is called direct quotation. This is called direct quotation. As per direct quotation, so if you are going to maintain, if you are going to follow direct quotation, then let's suppose 1 USD, 1 US currency equals to how many Indian currency? 2 Indian currency. This is direct quotation. If you follow indirect quotation, then what will happen? If you follow indirect quotation, then indirect quotation means, indirect quotation is going to explain value of our local currency into, so 1 USD equals to 2 INR. So 1 INR equals to how many USD? It means half USD, right? So 0.5 USD. This is called indirect quotation. Okay. So either you can maintain value like this, or we can maintain value like this. Even like if you have posted a transaction worth of 10 USD, how system is going to convert this into Indian currency? Forget about this one. If you have maintained direct quotation, if you have maintained value like this here in foreign currency table, if you have maintained value like this, like 1 USD equals to 2 INR, say for example, if you have maintained value like this, then how system is going to convert? 1 USD equals to 2 INR. So 10 USD equals to how many INR? 20 INR. 20 Indian currency. It's pretty simple. Okay. Whereas now, if we have not maintained direct quotation, we have maintained indirect quotation. So here again we have to convert. We have posted transaction into USD. We have posted transaction of 10 USD. If system is going to convert into INR, then how system is going to convert? Through indirect quotation. So system is saying that 1 INR equals to zero point 0.5 USD. It means 2 INR equals to 1 USD. It means 2 INR equals to 1 USD. Or in the other way, we can say like 1 USD equals to 2 INR. So 10 USD equals to how many INR? Once again, 20 INR system is going to calculate very easily. So we can maintain in both way, whether you can maintain through direct quotation or indirect quotation. Why do we maintain direct quotation? The reason behind is, why are we going to maintain direct quotation? Because our currency value is too low compared to foreign currencies, and that is what, for us, it's very easy to understand the value in round figure. 1 USD equals to, let's suppose, 50 Indian currency. It's pretty much easy to understand, but somebody says that 1 Indian rupees equals to zero point zero 0.02 US currency. It will be a bit confusing. That's what we do not maintain indirect quotation in case of Indian currency, because for us it's bit difficult to understand, and which is why we follow direct quotation itself. So let's suppose this is the rate. It's very easy for us to understand कि 1 USD equals to 60 INR. Okay, 1 USD equals to 60 INR. That is very much easy for us to understand, and which is why we are not going to follow indirect quotation. But this is the difference. If somebody asks what is the difference between direct quotation and indirect quotation, so both are the method to specify the value of foreign currency. Okay, direct quotation, actually, if you are going to follow direct quotation, then direct quotation is going to show you like it's going to uh, here the direct quotation is going to convert like 1 unit of foreign currency shows the total value of local currency, and indirect quotation means here 1 unit of local currency shows the value of foreign currency. Calculation will be same. Whatever method you are going to do, whatever method you are going to apply, the calculation will be same. There won't be any impact in terms of calculation. Okay, since this direct quotation method is very much easy for us because our currency value is low compared to foreign currency. That's what, in case of Indian currency, people are going to maintain direct quotation method itself. Okay, so this is all about configuration. Now I will show you guys. Now I'll just post a transaction, and I'll show how system is going to convert this transaction. So I'll post a transaction FB50 by using transaction code FB50. Now give a date here, 8, and which date we have maintained here, 8 itself. So today onwards this rate will be considered by system. So now I am going to post in US currency a transaction. I am going to post in US currency. Say for example, I am having a rent GL where I'll just post 1 USD itself, so that it will be very much easy for you guys to understand how it is going to. 1 USD, press enter. So now rent account is going to be debited, bank account is going to be credited. Now this transaction I have posted in US currency. How? Because here currency I have specified US currency. Okay, click on simulate. Okay, so I have posted one, one, one means what? One USD. Okay, now let me save this. I have posted this transaction now in US currency. Now, if you want to see the value in local currency, system will convert this amount into local currency automatically. Why? Because we have done the setting. We have done the setting configuration. See, this is your document 1006. If you click on document and click on display, click on document and click on display. So if you click on display, what is happening? System is going to display you the document which we have posted just now. So see here, now system is showing here in US currency, one US currency we have posted. If you click on display currency, in the sense change currency, then what is happening? It is going to show you the value in Indian rupees also. Okay. So this is how it will be. The way we have maintained the rate, this is how it's going to show. Now it's appearing correctly. Earlier it was showing 50 rupees. The reason behind, because I maintained 50 rupees earlier and I saved those transactions, and what happened later on, I maintained 60 rupees but I didn't save. So I didn't save, it means system was going to count the 50 rupees itself. It was saved earlier. So just now I saved, now I have saved and I posted another transaction, and here it's showing correctly. It's showing correct amount. Here system has converted into your Indian currency, and even if you see the value also, if you see the value also, I'll just show you. Use FBL3N, FBL3N to view the GL balances, GL report. If you see the value, system is going to show you. So you give GL number 4000. This is your end GL, and click on execute button. This watch kind of symbol. If you click here, system is going to show you the balance. Now see here. Okay, so this is a layout, report layout, which we can arrange as per our requirement. Okay, now here for you guys, it may be possible that this figure, this report will not be visible in this format, but this format can be prepared, made by us. That I'll show you guys, that I'll let you know how to change the formats of these reports and all. So right now I have posted one transaction in USD, another transaction also in USD. The first transaction got converted at the rate of 50 rupees. Why? Because I maintained 50 rupees in foreign exchange table, and later on I maintained 60 rupees also, and this value also as shown by system. So here, this is your foreign currency, this is our local currency. The moment you have posted transaction in foreign currency, system has converted automatically this value in local currency, and here we will be able to, system is going to calculate, system has made the total in your local currency itself, because here we cannot make total. Why? Because some amounts are there in INR, some amounts are there in USD. So if you are going to calculate total here, then this will be not a correct figure. The correct figure is this one. So that's all in this session, guys. That's all in foreign currency setting.